Hey everyone, welcome back. Today I want to go over three things. I want to talk about a new company, new to me, called Curve, Kurv. They have several ETFs that are looking kind of interesting. So I want to talk about those, raise some awareness. Two, I want to look at my portfolio and how much I made in November, which, as you can tell from the title, is around just over $900, which is pretty good. And then three, I want to talk about my ETF database that I'm compiling to show you how I choose which ETFs to buy next. So let's dive in. Looking at my disclaimer here, again, I'm not a professional. This is just my journey. So hopefully this is educational or entertaining for you. But nothing of what I'm going to say in this video should be construed as professional advice or even amateur advice, because I'm just an amateur. Even though I've been trading stocks and investing in dividend paying stocks and interested in them for 20 plus years. I'm not an expert, so please seek professional advice if you need it. And yeah, whatever I'm saying here is just for entertainment purposes. So let's dive in. I just entered in my log here. Hopefully that's big enough for you guys to see. So here in my log again is where I just put in which ETF, which stock gave me a payment, the date, and then what dividends or distributions I received from it. So this is the, I guess, full amount, the total that I received from LFGY, for example. And when these are all dripped. So when they reinvest, I'll put that amount here. So these are the additional shares that were added because of the distribution that I received. Again, right now I have everything on full drip, um, mostly out of laziness, but also just to be more passive. But then I'll reassess kind of each holding as I'm going along to make sure that it's what I want it to be. Anyway, so as I input stuff in here, I come over here to my actual portfolio. And so this will automatically calculate. You can see in column G, my OG shares. This is what I originally bought in. And if I were to invest more capital, I would update this OG number as well. But the current shares are what I own basically after the drip. So for AMZY, for example, I've gained 4.7 shares since I bought it at the end of September, just from dripping the distributions that I got from it. And then also the thing that updates is over here. We'll cover that in a minute, the dividends. And yeah, overall, the my portfolio is looking pretty good. It's definitely recovered a lot in the past week or two. Thanksgiving week was a short one, but I think it was actually a good one overall. You can see BTCI still, the crypto is struggling. Go off 17% down, BTCI 18% down, but LFGY is only 11% down. So it's actually doing pretty well. And 11% is the total return. That is not just the market. So this column N is what I've the return, profit or loss, just in the market value of my holdings. And then I add in the dividends to get the total amount here, which would be $208. So if you add 208 plus 287 here, you should get to the 495. Um, I'm sorry, if you take minus 495 and add back $287 that I received in dividends, you would get to a loss of only $208. But same thing, I guess, really. Add 208 and 287, you'll get minus 495. Anyway, hopefully that's clear. But yeah, things are looking pretty good. Up slightly, 0.37% total return since September. So just over 2 months now that I've owned this. Um, and then, yeah, let's look over here. So as I said, when I put stuff into the log, it will automatically populate here with the week that I received it. So this week is today's December 4th. So the week of December 5th ending is what I got, $182 just this week in distributions. And the way I like to look at this, I can kind of see if there's gaps here in weeks. It's like, well, is that a weekly pair or is that a monthly pair? This one, BTCI, is a monthly pair. Um, It says weekly. I think that should be monthly. Okay, good catch. Um, anyway, so basically what this tells me though is, okay, in probably a couple more weeks at the end of December, it looks like I should be getting another distribution from BTCI. So it helps me kind of see that, visualize when those distributions are coming. And if I'm missing any, that can raise some flags. But the other thing it does is I can see all of the past distributions here, and this number should be growing because I'm dripping all of these. So reinvesting, all of the distributions back into it. So theoretically, I should be getting more and more every time. If it's going down, I need to look at, is the underlying asset there going down, or what's happening to make the distribution, or is the distribution, I should say, this is just distribution. So are they reducing their distribution, which a lot have, because a lot of these are covered call ETFs, and as the underlyings are going down, it does affect the distributions. The other thing I look at is this column here, X, this last dividend, and it's color coded based on if the average of the last three dividends distributions, if what we just received, or what I just received, this 1827, for example, this is higher than the average 1689 over the past three distributions. So green is good, and this is, as you can see, a lot of things have been going or red because the distributions have been going down recently. So this is an indicator to me that, oh, Nvidia or Nvidia is actually doing better now. The distribution slightly went up, so I can kind of see at a glance. Ideally, these would all be green, and then it's like, okay, we're doing good, everything's growing. Or if they're red, like now, I need to take a look and say, is the market, correcting or pulling back? What's going on there? And I can see that. And if everything's green but only one thing's red, then that's a flag to take a closer look at that particular stock. Anyway, I hope that makes sense. There's a bunch of other stuff here I'm not going to go into in this video. But yeah, overall, down here, let me see my dividends for the week. Again, this is actively tracking as it goes. So we're in week December 5, end of week. Gotten 182. I've received 182 dollars in distribution. This is all USD, which again is a little bit lower. October, obviously, were really good weeks. November, the market was going down quite a bit, so it's no surprise that these are lower. But anyway, just kind of looking at that as a glance. Once I get more data, I think it'll be more clear to me. So yeah, if I look here, my October totals were 1341, which again is a little unfair because October had a little bit of an extra week. It had half a week towards the end of the week um, in the month. So you really got almost 5 weeks of distribution there. So that number is probably inflated a little bit as we look at just the monthly. And same with November. That was only four full weeks in November. So 902 is pretty good. Pretty happy with that. December is another fairly big month. It's got 31 days. So hopefully this number will be surpassing the 902 total for that. Yeah, but if you look at, so here, look at the summary, basically, if you take this column, this is all for November, take this all the way up to here, you can see the sum is 901.58. So all of these distributions are what totaled up to 901.58. Which again, overall, they're very small amounts. My biggest one here is $53 from PLTY, which, honestly, that's a really good distribution for PLTY. But it's not, $50 isn't life changing. But when you look at it's $900 based on $30,000 invested, it's pretty good. I'm happy with that. So yeah, that's my portfolio. Have any questions or comments about that? Let me know, and I'll answer them in the comments. The other thing I wanted to talk about is my ETF database here. So this is, I went through manually, entered in all of the different, let's see, all of the different fund managers that I was aware of, and I'm still finding more. So I'll continue to add to this. But we have Amplify, Defiance, Granite, Curve, Roundhill, and of course YieldMax. Um, And yeah, so I'm basically going through their list of ETFs that they have, putting them in here. This column B is the current market price for this ETF, and this is automatically pulled from Google Finance. Which you'll see here, some of these say name. That's just because this sheet is pulling a ton of data from the internet, and Google Sheets gets a little bogged down. There's no issues here. With the formulas or the stock itself, it's just a matter of pulling the right data. Because generally, when if I refresh, so anyway, whatever. As we continue to go here and it auto refreshes, some of these will fill in. So I do apologize for that, but for the most part, the data should be accurate. Also, these yields here are calculated based on the pulled data from dividendhistory.org. So thank you, dividendhistory.org. I'm not sponsored or I don't support them in any way. I just like their format for reporting out dividends, so I can get that information from them. But anyway, so we can see the last distribution here, the yield on the current price, column J, and the yield on the earliest price. So the earliest price is like if you bought in at the beginning, what would the yield be? And so I use this to look at that to say, well, if the current price has been going up steadily, but the distribution has been staying the same, you should see the yield on the current price actually go down, which isn't a bad thing. But that's why you need to compare both the current price yield and the earliest price or some other reference point to see. Because likewise, if we look at one like, oh, I don't know, Misty. Let's see, where is Misty? Misty's part of Yield Max. If we look at Misty here, MSTY, you'll see, oh, the current yield is 98% on Misty, which looks, fantastic. But the fact is that a year to date, the stock price is down 76%. So if the distributions have stayed level, which they haven't, I think they've reduced, but if they're going down less than the stock price, you'll see this yield look really attractive, 98%. Wow, that's really good. But then if you look at the yield on what you may have paid for it, depending on when you bought it, but if you bought it a year ago or whenever this from the beginning of the year. So if you bought this at the beginning of the year, you'd only be getting a 23% yield on that original money. Hopefully that makes sense. I know it's a little confusing, but again, this is why I have two columns here so I can look at both of these. And it's important to look at also the stock price. So this is just the market stock price change, however you want to call it, the value of the stock itself. It doesn't count total return. It's not the distributions. It's nothing. It's just the price of the asset. So you can see how much it changed, and I have 30 days. So I have 1 month, 6 months, and year to date. Um, Year to date is obviously going to become a little less important when we go into January, but it's good to see like over a longer, and maybe I should change this to 12-month return. Maybe I'll do that. But anyway, it's good to see like looking at these to say, okay, well, everything in the last month has been pulling back. So when you look at that, it's like, well, okay, if that's down, but year to date in 6 months, it's actually gone up. Well, that's a good sign. So it's good to look at that information too. So anyway, that's why I have all of this together in my database. Um, and I can sort on year to date. Let's sort by that and say, oh, okay, look at this. Round Hill, it's only been around 4.7 months. Again, another thing to take into account, but 30 days, it's up 15%. And since its inception 4.7 months ago, it's up 49.3%, which again, you see year to date and 6 months are the same because 4.7 is within that 6 month period. And the distribution is 50%. Again, this is what I'm saying. If you bought in 4.7 months ago, you'd be making 74% on that price. Whereas now you're like, well, it's only earning 50%, which don't get me wrong, 50% is great, but it's like, oh, it's not as attractive as 74%. But you have to realize that the stock price is going up, so the distribution percentage is going to go down unless that distribution has gained the same amount. Anyway, I know it's confusing and it's confusing for me to explain it. Hopefully it makes sense. Um, but anyway, by sorting by year to date, I can kind of see what's going on here and say, oh, GUI, another Google one. Obviously, Google has been doing very well, so you can see a lot of the Google ETFs are up here. But you can look at all three of these and say, if they're all green, the distribution is fairly high. Maybe this is a good one to purchase. Then you look at, well, okay, how long has it been around? Some of these have only been around. This one, QLDY. Um, QLDY. I think this is the one that pays twice a week, but it's only been around for like 3 months. It doesn't have a huge track record, and it's only down 3%. Not a big deal. But the yields 39% on current 19%. I wonder if, mm, yeah, I don't know if I calculated this correctly because I think this is dependent on, it should be twice weekly. Anyway, whatever. I'm not going to buy QLDY right now. But you can look and say 2.7 months. That doesn't have a great track record yet, so I have to keep that in mind when I'm looking at the rest of the data. All right. So what I'll do here is say, oh, Google's had a really good run. Several stocks are looking pretty good here. So I can also go down here and say, let's filter on just Google. Select all one. That is not what I want to do. I want to clear that. Select only Google. Now I can say, oh, okay. We've got three here. We've got GOO, Goop, and GUI. what what a fun group of, yeah, growth stocks. I'm just kidding. I like Google. So here we can see they're all up because again, Google has been had a great year. So year to date, you see the Round Hill one is up 49%, Curve is up 31%, and Yield Max is only up 2.5%. And UMax has been around for 30 months, so over 2 years. So longevity, Curve, and Yield Max look really good. Roundhill has only been around 5 months. However, Roundhill as a company has obviously been around for quite a while. So um, and yeah, I mean, you can see that Roundhill seems to be doing something right year to date. I guess not year to date. You have to compare this to almost a 6 month because this has only been around for 4.7 months. But still, 49% compared to 24% even is really good. So I think looking at this list, I'd say, oh, GOW, looks pretty good, even though the current yield is lower than 78% for Yield Max. The market change for GUI hasn't been very good this year. So anyway, I don't know. All of these look pretty good to me. Again, this isn't advice, but this is just the thought process that I go through when I'm looking at potential stocks to buy. Anyway, I hope that helps. I don't know if that helps, but that's just insight into what I do to select my next purchase. So I'm filling out this database more. I just added the Amplify ones in here, and I just added the Curve ones, which is the next thing I want to talk about quickly. Um, Curve, KURV. Apparently, they've been around since 2022, I believe. And they're a fairly new company, but they've got they've got two growth and income ETFs, two precious metal income ETFs, and then a couple single stock income ETFs, which I do find interesting. Again, the pretty common ones, Netflix, Microsoft, Tesla, Google, Amazon, Apple. But there's also these NASDAQ, and then this high income KYLD, which again is obviously the goal of that is just to generate high income. Um, but performance wise, yeah, they're looking pretty good. If you look back at, well, so anyway, I guess let's finish up here before we jump back to there. Anyway, I had never heard of them before, but it looks like I like the fact that they don't have a million, like Yield Max, I feel like has a million different ETFs. So it's cool that they, even though they've been around since 22, they have kind of a limited, which means tells me that either they're a small company, which I think they are, or and they're focused on only choosing higher quality investments. So yeah, I don't know. It's something that I'm going to look out for in the future to see what offerings they have. But also, hopefully, if you have not heard of Curve before, now you do. But let me jump back to here because here's another thing I can do. I can sort by manager. I can do Curve here and see. And looking at overall, like I said, a lot of these have been around for, yeah, probably, well, not quite inception of the company. But since 23, um, around this time, 27 months ago. So several of them have, and honestly, they're doing pretty well. Like I said, everything is down, so it's like Tesla, Amazon, Netflix. Those all make sense. KYLD, their yield one, it's down a little bit year to date, but they do have decent distribution yields as well. Um, and then yeah, their Goop, like I said up here for Google, has been doing really well. I think especially compared to the Yield Max one, and this one's been around for 27 months, so just about as long, or maybe even longer. I don't know, than the Yield Max one. And then gold and silver looks like they're doing excellent. Not quite as high of yields, but still pretty decent yields compared to 3%. That you get in your high interest checking. So that's all I have for today. I do apologize. I uploaded this, and somebody commented that the audio was cut out. I'm not sure what happened there, but I just decided to record the whole thing again. So if you got this far, thank you for watching. Like and subscribe, the usual things. I'm not on here to hit a particular number, but I do like sharing information and my methodology for looking at ETFs and passive income in general. So again, yeah, thanks for coming and hanging out. Say hi.